Righty ho, everyone, and welcome aboard. Thank you for joining us for Trading Buddies Monday edition. It's great to have you on board. Thanks for being here. I took a bit of a hard week, but it's the second last week of the month, so there's no reason other than the market's waiting, I think, for something to happen regarding this ridiculous scenario that we find ourselves in once again in, where's that place? United States. And the debt ceiling situation seems a little doubt in my mind what will happen. But that said, I don't know exactly what result that will have in terms of what it will do to the US dollar or the indices. And I guess the jury's still out on that. We will wait and see. Righto, let's get into it, shall we? And first up, of course, as always, we will have a look at gold and see what that's doing. You should be able to see my not gold screen, that's dollar yen. Dollar yen setting up there for a trade, actually. And I might come back to that in a little bit. Looks like a false break of that support trade line to me. We'll have a look at it at the top of the hour. But first gold, as I said. And let's go to the hourly chart, see what's been going on since last we spoke. That, of course, was Thursday. And I haven't been trading this because I haven't been trading at the right time of day. Let's review last week. That was a mess. And we said no trade. Tuesday, highs up here, lows down here, winner. Highs up here, lows down here, winner. On Wednesday, Thursday, highs up here, lows down here, winner. Good week. Friday, lows down here, winner. 4 out of 5, ain't bad. Hope you're on board some of those. And despite the fact that I say trade it at a very, very small risk, that's not a bad result. And I repeat, trade it at a very, very small risk because it's unproven. We're just testing it out. All right, today on the 1 hour chart, we've got a current candle whose high is well inside the range, which of course is down here, the low of the range, the high of the range, which begins at the open of Asia session, is there. I hate that we're trading straight into the weekly pivot and trading straight into the DR1 monthly pivot BOK. At daily pivot, that's not so bad because we're underneath it. So there's a little bit of space there for us. That one's okay. We'd have to take the weekly pivot on trust that it is going to break. Hi, Paul P. How you doing, mate? I hope you're having a good week thus far. As old as it is, hours only. Don't mind it in terms of double bottom, higher high, higher low, higher high, potential higher low, potential bounce off the daily. But I don't like the resistance that we're trading straight into. I said we'd add filters from this point. The risk to reward for DR1 would be, what, $11, say $12 of risk to $7 of reward, monthly pivot, give you about 1 to 1. Look, I like the fact that we're in the middle of the range, so we will place the order, but I'm not in love with it, I've got to say. We've got less than a minute to go, 45 seconds to go, in fact, and we can set the parameters up. So again, if you're new to this, please do not trade it with any significant money on the table. It's a breakout trade, right? So we're trading the breakout of Asia session, which begins on the second candle of the day. This one here, we pick the high of the range, we pick the low of the range, and we're looking for it to break out of there and give us some momentum to either side. We will cancel whichever does not trigger. So it's an OCO, one cancels the other. And we're doing this at very low risk until we prove that it's successful over time. Righto, there's our new candle. Let's go sailing. We'll start with the buy. As you can see, I'm trading this at very, 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 very small risk. to buy stop, and the entry will be just above the high of the bar, which is 1982.4. We'll go 1983, which will be bang on the weekly pivot. You can guarantee it. So 1983 is our buy. Our stop loss will also be our sell entry, and that's at 1971. So 1971 becomes our stop loss. And our target for the long will be bold. We'll go to that level there. So the high there's 1993. 1993. Okay. There's our order. Entry here that you can't see because I've got it covered. Weird. Still can't see it. It's there though. You can see it over here. And the stop loss, you can see. The exit, you can also see. Let me get rid of that big. No, actually, let me change the value of it. And we'll go with something that looks like smaller, dotted. Happy days. There's our entry and our stop loss for the short. Now let's place the short. And it will be a sell stop because we don't want to go in at market. Sell stop at price 1971, I think I said. And stop loss was 1983. Would that be right? Yes, 1983. There we go. Take profit for the short will be just below DS1 here. We'll go with the open of that bar. Sorry, the open of that bar. And we'll go with the low of that bar. 1958. So 1958. I was born. I was kicking around. I was probably a little arsehole at that time. 2-year-old I would have been. Shocker. All right, there's the order. So we've got a short in the market. Sorry, we've got a short order in the market. We've got a long order in the market. As I said, we'll cancel the one that doesn't trigger and let the other one go to target if we're fortunate enough for that to happen. But as I said, 4 in a row and no trade on the Monday. So perfect result last week. Rightio. I've got a few things to talk about. Not much is on my radar, I've got to say, but there are a couple of things to tidy up. Last week, when I left you, we were short Aussie dollar, short underneath this bar, and we failed to get our first take profit. So I moved my stop to entry, and we're now out of that trade. And as you can see, we're trying again to get back below this trade line, which now, of course, is totally out of the question. But what it has done, that non-move in the market, if you like, it's given us a clear double bottom, of course, we had before. Now we've got a potential higher low, which does keep me out of this short now. So if it goes short, then I've missed the boat. But it's looking dangerously like a rally back to the highs here, in my humble opinion. So we're out of that one for no result. As we are with oil, now I traded oil long on Tuesday. Might have been Tuesday. We were trading just above this bar here. We did get our first take profit as we came back into the range. Or did we? No, we didn't. We bounced off the bottom of the range, and now we're back at this support trade line, which is more evident on a 4-hour chart, of course. So we're at a crucial level here for oil. When I say crucial, it's not that crucial, but it's a good trading opportunity should it play out here. So we're looking for either a break and retest or a break, consolidate, back above, retest, and look to trade it back to the range. Have I got a preference? Not really. I'll just wait and see what happens. It all depends, in my opinion, on what they're going to do with this debt ceiling crisis, as they call it. Well, I've got a fair idea what they'll do. They will do as they normally do, and they will raise the ceiling. What that actually does to the market is beyond my, understanding, let me put it that way. is that price, whatever that result is, I believe it's priced in anyway at this point, because I do believe that the market thinks they'll do exactly as I think, because they have done in the past and they just don't even blink an eyelid. But who knows? If they don't, then I would expect a big move in the market. But I think the market is on pretty much hold in terms of dollar dependent trades anyway. We shall see. For that reason, I think it's far better to trade inside a range than it is to trade outside a range, what I call my burglar trade, which is the break-ins, versus the convict trade, which is the breakout. So break-ins are what I'm looking for, not breakouts. In other words, false breaks. The only other trade was good old CAD Swiss, where I'm still trying to get the bottom of this, or to kick it in the arse, if you like, and get it off the floor, because it's been on the floor for way too long, and these are all-time lows here, right? For that reason, I don't anticipate we're going to spend too much time here, yet here we are, there again, and we're trying our little puffer valve to get off the bottom, but gee whiz, it's a struggle, I've got to say. Don't like the fact that we're back below that trade line. And indeed, if that is a bull bar today, or even a doji day today, I may just hedge this long by putting an entry short. It won't be under the candle, it'll be under here, but it will be a hedge on the position that I am in long. I want to keep the long in place because if this does reverse, it's got a long, long, long way to go. So that's why I'm holding on to it. Not a lot of money on the table. They're the only trades that I need to catch up with. I've also entered an order this morning on Kiwi versus the dollar. Why? Well, it's a good question if you look at this chart, because it looks, for all intents and purposes, like we've got a potential reversal on our hands here, which, of course, would be an inverted head and shoulders. Those of you who aren't familiar with that, it's very convoluted, I must say. But if you consider that to be a left shoulder, that to be a head, and that to be a right shoulder, as I say, it's very convoluted, very compound, but there it sits. You've even got a double bottom on the bottom of this range, yet it's that range that I find attractive. And I was just speaking about trading ranges, right? So we've come off the top here, big rejection bar here, big rejection bar here, double cross on the monthly pivot. That's what I like to see. And because we've come off the top of that range and retested the top of that range almost to the pip, but it's the double cross of the monthly pivot that convinced me that this is the right position or the right direction to take, really trading the range. And if it breaks clear of the range and that inverted head and shoulders, then we'll be in the money. But we'll be safe here if price comes back to the bottom of that range, which is why I'm happy to take that trade short. Now, we have to bear in mind, of course, that there is RBNZ news coming up. I think that's maybe Thursday morning, could be Wednesday morning. I think it's Thursday morning. That's far enough away, I believe, for this to find a direction prior to the announcement. So if that happens to be to the downside, which in my considered opinion will be, why? Two reasons. One is I think the US dollar still has room to move, and I've been touting this for quite some time, so let's have a quick look at it. When we're at the bottom of this range, there was only one way I thought we would want to be trading it. Then we put in a double bottom as well. It finally broke out of that tight range, and at this stage hasn't really looked back. Retested the breakout area inside the week here last week, and now looks, for my money, to be going back to this horizontal level, which is where I anticipated it may. So I'm still, for whatever reason, it's only technical. It could easily be stymied by this debt ceiling thing if they actually do something about it. But I can't see that as a bad position to take long the dollar at the moment. So for that reason, I'm happy to trade Kiwi short. And the second reason is, although the market is expecting, or the economists are expecting, another interest rate rise from the Kiwi, I don't think they've got the kahunas to do that. Again, they've been the most robust interest rate rises, if you like, or increases, if you like, 0.5% last time. And I'd be very, very surprised. No, I wouldn't. No, the market no longer surprises me. It just does what it wants to do anyway. So do reserve bankers. But to my mind, I think raising the interest rate again at this point and I really don't know what's happening in New Zealand, but it seems worldwide to me that there is, albeit very small, a sign that inflation is, if not rising, then perhaps stable and maybe falling a little bit. So I'd be surprised if they don't hold the RBNZ. And for that reason, I think the Kiwi is a sell. So there you go. That's why I'm short Kiwi versus the dollar. Two others I'm interested in are dollar versus the yen. And I did tout this not long ago because I saw a potential setup on the hourly chart, and it is there. But this is twofold, and you've got to take into consideration whether you're thinking longer, stronger, or whether you're prepared to back what you think is the directional bias, which I've just described to you on the dollar, to my mind, is long. There is a double top sitting here. We've broken back below this important level. Why is it important? Because it's been resistance, 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 support, support. I don't need to go back any further to establish that 137.80, which is where I've got that line drawn, is a substantial level. Certainly something the market's looking to. We've had a very, very slow build up this time to the top of that range, and we're not there yet, but we have broken the horizontal level and we have retested it. So I think this is a buy zone. And if I go down to the smaller time frames, I find a little hiccup in that retest of that level there, 137.80 as I've got it. It does look like a false break. So here's where I've got a conundrum. Is this going to play out before that? Good question. And I can't answer it for you until it happens, to be quite honest. All I can do is go by what the candles are telling me. And at the moment, I've got yet another conundrum, and that is, do I want to trade at the daily pivot? Given that it has been tested, given that I do have a false break of that trade line, but I'm on an hourly chart. Do I trust dollar yen on an hourly chart? The answer is I don't know, because I've never traded it on an hourly chart. So that really does make it difficult. But, it's for that reason that I'm not going to trade it. But if I do see a break of this resistance area, this short-term resistance area, so break and retest here, if I get that opportunity, then I think I will trade this long, taking profit before the highs. The other one I'm interested in is silver. Silver because, I've got a long-term bias long for silver, but what I see at the moment is this coming back underneath, or bouncing off that resistance level, number one, coming back underneath this resistance level, which of course is a trend line, now a trade line. The one thing I don't have, two things I don't have. I don't have a bullish decisive bar on the weekly, which is what I would love to see. In fact, it's a red bar, which I don't like. Two, I've gapped down this morning, which I hate. And three, I haven't had a decent retracement, which really, to my mind, needs to go back to this level, which is the breakout area and corresponds with this former resistance area. So until I see that, I'm not confident trading silver short, despite the fact that we have had a break and a partial retest, if you like, of the trade line. So that's where I'm at. It's silver short, but I want to see a rally first. It's dollar yen long. I'm holding off because I don't want to trade it on the hourly chart, really. And everything else is pretty much boring, I've got to say. How's Ash seeing the world this Monday morning?
I agree with you, mate. It's kind of one of those days, isn't it, where you kind of scratch your head about what to do, because there's there's quite a lot going on at the UK is a really interesting one. The pound's a really interesting one because of the inflation numbers that are due this week, and the UK has been the most blighted really with the inflation narrative. You know, when you actually look at the numbers, they've been hideous. You know, for consistently poor, well, consistently high really over the course of the last 6 months, where other countries and nations seem to have been able to fight it. The UK just hasn't been able to do that. It's just it's really struggled to get a handle on inflation. So I think the pound's really interesting this week, and and I agree with your analysis about the dollar. It's a difficult currency in some respects because as you say, some of the chart patterns, particularly against the Kiwi and the Aussie, look like they might well be about to reverse, but the data still suggests that there's some strength in the dollar. You know, we saw jobs data last week again come out to be overly bullish, really, overly hawkish, really, for or a hawkish message for Jerome Powell and clan, because the data just hasn't managed to kind of regress enough. And also inflation data was relatively stable. It's been relatively stable really for the US. But the Kiwi, as you quite rightly say, mate, the rate decision is a difficult one as well. You know, Kiwi actually in a very strong seasonal pattern. So that kind of starts to weigh things in against kind of like going for dollar Kiwi. And the rate decision is that will make that whole thing very difficult and make it very difficult to trade with too much confidence.
Sorry, did you say seasonally the Kiwi is very strong?
Yes,
Oh, don't
is.
say that, Ash.
Yeah, yeah. And the dollar a little bit weak. I mean, you know, it's a tricky one, really. You know, when you're kind of trying to look for currencies that are strong and weak, the yen looks quite weak as well. So the dollar yen looks good, but
yeah, that'd be a change.
There's just a lot of counter narrative kind of going on, and I wonder whether it just makes it a very difficult environment really to kind of get a proper handle on.
Yeah, I really struggled this morning when I was doing my analysis. I'm going, oh, really? That looks like SH1T to me. Move on, and that just kept going. I couldn't find anything that I really liked.
Exactly. Exactly. There's nothing really standing out, and as you say, you know, the debt ceiling aspect is a factor. The only thing about the debt ceiling which maybe kicks it into the long grass a little bit is the fact that it's still a number of months away from being a major issue. You know, we're really not at the point right now where it's
in like less than 2 weeks now.
What's that? Sorry?
Don't they default in less than 2 weeks now?
I thought they had longer than that. I
was pretty sure I was reading that this morning, but yeah.
Okay.
Don't read that as gospel because I'm not 100% sure. Somebody will be Googling that as we speak.
I'm doing it.
Okay, cool.
Yeah, you there, Jeff?
Hello, Phil. How you doing, mate?
Yeah, good. Listen, I don't know anything about this, of course, but I did hear this morning where they said the beginning of the dramas start in 14 days, but it could take up to 3 months to pan out.
Yeah, that's what I thought.
Ah, okay.
I think that's what they said. I was on the BBC, I think.
Yeah. So it's convoluted.
Yeah.
Why would I be surprised at that?
Oh yeah, actually you're right. Yeah, negotiations are underway, but they face a deadline that could come as early as the June the 1st. I guess they can always push that deadline, and maybe that's why we've possibly got a little bit longer than we need to worry about too much at this stage. But yeah, just really interesting things going on, mate, and the you know, because of it makes the picture very difficult. I find the Nasdaq quite an interesting prospect as well, off the back of the debt ceiling, because you'd suspect it with the Nasdaq that would probably falter the quickest if that came in, if the debt ceiling did sort of you know, manifest itself. So there's lots of things I think that are potentially kind of off the chart or off the data points, which makes it just that little bit trickier to follow. As I say, this week UK data and that rate decision from the Kiwi maybe push us away from the dollar, and maybe it'd be easier just to kind of like stay away from the dollar this week altogether. I don't know, but yeah,
by all means, trade the miners.
Yeah,
and maybe ranges. I'm going to share with the room in the not too distant future a link that Phil shared with me yesterday, and it's an interview with a guy who's got a bullion company, right? So he's heavily invested in pushing precious metals. That said, what he had to say was absolutely, I wouldn't say mind-boggling, but certainly thought-provoking. And I'm going to share that with in the chat box, a link to that.
Yeah.
It's an interview with Danielle Gamboni, the Danielle Gamboni show. Do you watch that?
No, I don't know about that.
She gets some great guests on. Stansbury Research, another American company, obviously, but she does lots of good interviews with people who know what they're talking about. And I'll share that with you. And if you want to obviously subscribe to her YouTube channel, then by all means do so. But that'll be a bit later. When I find the link, it'll be in my inbox there somewhere.
So, sorry, man, what is she talking about?
He's talking about it's kind of a bit of a conspiracy theory, yet not, in my humble opinion. And Phil was telling me this morning, I was having a chat to him, that he actually heard an interview on radio today, which kind of shared the same potential theory or thesis, if you like. And that is that the current situation with the US is something that they're actually not fighting, although on the surface it appears as though they would be. In other words, there are forces, they shouldn't say that. We're in Star Wars here. There's a certain theory that the US are setting themselves up for failure with this. So that's an interesting concept, of course. But it's not stupid when you listen to what this guy's got to say.
Yeah, it's difficult, isn't it? Because obviously, if they were to default on the debt, then the US dollar is just going to sink, and you don't really want to be caught in too many positions with the US dollar. And I guess that's the thing about knowing the date of the potential debt ceiling, because we have been here before a few times where it was negotiated right down to the wire, and then they came up with a solution. And
it's every 2 years, isn't it?
It's every 2 years. Yeah.
Nothing's changed. They just keep doing the same thing.
They do, and maybe they will default at some point. But yeah, very difficult to know if that was going to be the case. And there's going to be some people that are quite happy to take a position on that, because actually, the upside for the dollar on the data is nowhere near as lucrative as the downside if that debt ceiling wasn't, if they go through it effectively. So there'll be plenty of investors that I suspect that will be quite happy just to put some, not a lot of money, but just put some money beside and sort of say, let's have a little punt on the fact that they're going to default, and we're going to make a whole bunch back if we're right.
Has the market already reacted to that, though? I mean, are we positioned for that to happen? Because it's almost certain that it will, right? In my mind, anyway.
What position that they eventually will default, you mean?
No, that they'll raise the debt ceiling.
Oh, yeah, probably.
They won't default this time, but the day will come.
Well, what I'm saying is that there'll be investors that are quite happy to speculate that they will default, because the risk to reward, it will be amazing.
Yeah, sure.
So if you were to, if you buy gold as an example, as a hedge against that, then it would be a pretty attractive prospect just to have just some money on it, not a lot, because you don't need a lot, because if they default, then it's just going to absolutely be obliterated. I don't know. I mean, the whispers are probably that there's enough negotiation and conversation going on that that they'll figure out some sort of, you know, that I don't know how far apart that the teams are, but they're going to talk and they're going to talk and they're going to talk, and they all know how catastrophic it would be if they did default. So so you know, the chances are they are going to come up with some sort of resolution.
One will tell, hey, we will see. But as you say, if you want to position yourself for that, wouldn't hurt, I wouldn't have thought, to have, I mean, we've been saying this for a long time, to have gold and silver in your portfolio, maybe Bitcoin in your portfolio.
Yeah.
That wouldn't hurt either. And everything else against the dollar, I suppose.
Yeah, absolutely.
Take your pick.
Well, as I say, mate, you don't need a lot, do you? You wouldn't need a lot, because if that was to happen, it would be it's just such a huge event for the market that that you would think that it would just it would make a lot of money very, very quickly as well.
Yeah, look, as I say, I'm bearish silver this week. I'm bullish dollar yen, so they are counter exactly what we're saying, but I think there is time for that to play out.
Yeah. Yeah,
and I think
I agree.
They'll probably buy into that anyway. So
yeah,
I'm happy with the position.
I agree, and also, you know, the yen sort of the aspect of the yen, because the yen's quite weak this week as well. You know, if you're looking at sort of anything to trade, the yen's a decent example, a decent prospect to try and sell, and because the debt ceiling sort of stuff will bubble along while it's kind of like bubbling along and they're still chatting, the market's probably still quite comfortable. You know, markets don't tend to want to sell off assets, risk assets, unless they have to. So so while there's narrative bubbling along, unless somebody comes out and says, look, there's no way, like when they're walking out of meetings and stuff, the market will react, but not for very long before it's kind of like, you know, back up again. And we saw that with the Nasdaq. The Nasdaq had a minor sell-off at actually what is a significant high in the Nasdaq, because all of a sudden it's kind of gone into bull market territory. So it's a significant high, and it only had a minor sell-off when some of those debt ceiling negotiations seem to hit a bit of a roadblock. So the market doesn't seem that keen to sell off. Yeah, there it is. There, I mean, it was hardly anything, you know, that it came down after the announcement that there was problems with the meeting. So there's nothing to suggest at this stage that we should be anything but still holding on to longs. Initiating new longs, I'm not so sure, and I wouldn't be so keen on. But if you're in longs, there's no reason to kind of necessarily get out at this stage.
Yeah, bit of a trend forming there, no question.
Yeah.
Stays above this level, I can't see a reason why that won't continue. Yeah.
Yeah, absolutely.
Indeed.
Well,
but what do I know about price action? This guy in the room that's just joined us, he's the man. Hello, George. How you going, mate?
You gents know more about it than me. I'm listening to what you're saying, and it's kind of forced me to put up
exit all your trades, right?
Exit all my trades. Ask for powers to share my screen. You know, all of those things.
Stop it, George. Stop it.
but
there you go.
I'm glad you let Ash carry on for a couple more minutes, because he's just said something which I was trying to find ways to put it into the conversation. And you know, when you say the market, basically the market will keep doing what it's going to do, except when they walk out of the meeting, there might be something temporarily. Yeah. And that's exactly what I was going to say, that from a price action perspective, you know, we just look at the charts, but I'm aware that there may be all these reactions to news which I may not get the alert like on Forex Factory. So I'm always looking out for these surprise candles, which means trading through this kind of scenario, still trading, but I've got to keep wide stops, low risk, you know, in case you get these moves that will work themselves out. And the reason I put S&P 500, because I'm not trading, remember, you know, like I kind of said, by the time it opens, I'm done with my 12-hour shift for the day. But if you ever look at S&P 500, I mean, the only dramatic thing that really stands out is this big candle here. And that had nothing to do with debt or anything. That was COVID, right? So when I look at the chart, if you had to say to me, okay, where do you think there was dramatic things happening in the market? Except for this, the market just carried on doing what we expected to do based on a price action perspective. So, and even with that COVID move, market was, pretty tight channel here. So strong bulls just became in a bit of a wedge, 1, 2, 3, double bottom, and we just kept on going up. So yes, all of these structures will move markets, but to be very rare, unless that event that took place, I don't know, 10, 15 years ago when Swiss decoupled from the euro, when you get something as crazy and dramatic as that, everything else from a price action perspective is baked in. When you drill down now to the 5-minute, 15-minute, you got to expect some wide gyration. So you just manage that with wide stops, low risk, and just keep going on.
George, yeah, sorry, mate. Go on, you go.
Yeah, just mine's a quick one. It's yes or no answer, but maybe deeper than that. That January of 2015, which anybody who was trading at the time will never forget. Were you in the market at that day, George? That fateful day when they decoupled the Swissy from the euro, or euro from the Swissy, whatever it was.
I wasn't in the market at all. I remember at that stage, one of the guys that I was coaching, he phoned me and he's crying, "I'm not going to trade again." I'm like, "What happened?" And it was just pure luck that I wasn't in the market. But he lost a big amount there on that, and that can happen, right, to any of us at any given time.
That's why we don't trade 50% of our account, right?
Well, I wasn't going to say he was going in big. He was hoping all along. That was one of the issues I was dealing with him in terms of trade small. You make your cash, don't make it in one day. And I can't remember what it was. I think it was probably in 5% on some trade, and then that just went against him, and that was it. Never came back to trading again.
2,000 pips in a heartbeat will do that to you.
That's it.
Yeah.
So yeah.
My question, George, really was you talk about sort of like wider stops. Is another potential approach there just to kind of up a time frame or two? So those stops do become sort of, but by default they become wider. So you just look at the same kind of setup, but maybe on the 15 or the 30 or maybe even the hourly.
Yes, and I mean, you're right. When I say wide stop, if you went up to 15 or hourly, it's actually probably an hour stop or a that's what it is. And the reason I don't say hour stop, because you can trade on the 5, but looking up at higher levels, but it becomes confusing because market will give you different signals. Yeah. So when I say wide stop, it's not random. If this was, let's say this was our 5 minute, you gotta go and find really the lowest level. And if I'm trading up here and the stop is here, if I was to go up to the hourly, it's just a normal stop on the hourly, right? So if you can process information, multiple time frames, by all means do that to find a stop that you say, in this market for this week, I'm only going to be using hourly stops. When you say yaks, that's too wide. Well, that's a wide stop. That's what you use in this uncertain environment, unless you prepare to get stopped out more often. Which really then negates going in small, because by the time the day is done, you've lost quite a bit. Yeah.
So, have you got a directional bias today, George? How are you feeling about the market?
So, UK 100, it's not for today. I'm waiting to see what happens when you get to these extremes up here.
Yeah.
So if today by any chance gets up there, then I'm going to look out to see if we reversal back into the range.
Yeah.
Or if we get down here. Otherwise, I'm going to try and hopefully get some kind of candle like this. If you got that, in that zone, that's a beauty. Then, that's definitely what I want to trade. So I'm not rushing in. We'll just follow it through and see what happens. Gold is interesting. I'm trying to move things out of the way. So gold, this yellow zone here is the apex of this triangle. We spoke about it some time ago. And we're back into it. And also, the market coming down here is giving us a double bottom with the beginning of April. But more importantly for me, this triangle here, convergent triangle, strong forces, and out of that, the market tends to break out, come back to the apex, break out again, and we may have the opportunity for the bulls to go up. They have, it was a failed breakout beneath the low of that triangle. So that's pretty key for me. It's a higher low or a double bottom with that. So I'm really interested to see if the bulls are gonna come and break out above here. So I'm in the market looking for longs now for gold.
Yeah.
It might set up before we get the breakout of the high of Friday. But if it doesn't, then I'm gonna wait for that. So this is where we're at. I'm hoping my probably high probability, not higher probability, this event that I would like to see a double bottom down here and a higher low, give me an opportunity to, make a bit of money before we try and break out above here, because, who knows how long that might take. If it doesn't come back and it starts to get up here, I'm not going to jump in. I'm going to wait for a break above the high of Friday, any kind of retest and go long. So I'm pretty bullish on gold.
Right.
The lower the better. If not, wait for the breakout.
Got it. So you really want to see that come down and give a double bottom down there and then get a high low off the double bottom.
Yeah, that for me is that would be the sweet spot, right? That's what I'd like. And if we don't get that, then I'll just twiddle my thumbs. I'm not going to jump in anyway in the range of the day.
Yeah.
Until we got above that and look for an opportunity. But I'm hoping it comes down here and gives me a double. I mean, this is good for the bulls. So they're showing momentum, but I need to see their resolve, and that resolve will be seen by the bears trying to break out beneath the low of the day. I mean, if you ever look at this level here, which I just move around looking for key levels, bull breakout, came back, and that was testing the breakout above there. And that's been tested, so that's good for the bulls. I want to see that other test, and if we get that and any acceleration of that, look for higher low, then happy to see how far we go with it. So bullish on that.
Does the volatility play a part for you, George? When you sort of like, when we open the charts today and we see just a lack of real interest in the market, does that make you think actually not a bad time to get in and see if I can get a bit of a burst? Or is this not really the kind of environment you're interested in? Or is it not really a factor?
I don't think it's a factor, because I'm looking for these patterns, right? And the pattern doesn't have to be large, if that makes sense. So you could have let's see if I can, hopefully I can find it quickly. Just give me a moment. Something, I don't know if I'll find it quickly on my PowerPoints, where the pattern was small, but it really yielded something worthwhile. Just give me half a second.
When you say small, you mean the candles were small, low volume?
Candles were small, yes. Yep. And it would have been easy to look at it and say, well, yeah, there's no momentum here, so let me not get into it. But just by looking at it, let's see if I can share. I found it. Okay, so here, so huge sell-off, in the morning. Tried to break beneath the low of the day, failed. This is Hang Seng. Good for the bulls, but bulls, of course, couldn't get above it and got a double top. Now, I mean, many times you say, well, I've seen the double top, I'm going to look for the lower high or whatever the case may be. This time we didn't get it, but off the double top, we had a convergent triangle. You know, just like I was mentioning on gold, that convergent triangle forces are pretty strong. The fact that we end up market trying to converge to a point means there's big fighting taking off here. The bulls tried to break out above it, but it's very hard to break out of a convergent triangle, or if you're strong enough, they need to put successive candles. They failed. Now, because of this little pattern here, a lot more confidence to jump in here, and you're rewarded quite nicely all the way down. So I don't ignore that. And sometimes you have huge patterns, you know, it's a big convergent triangle that everyone can see, but that's just the fact we have that coming off a lower high double top, for me is good enough. So whether it's a big pattern or a small pattern, I'm always looking for the patterns. I'm not concerned about volatility, if that makes sense. I don't know I'm more interested in what is happening with each pattern that's taking place. And that's how I make the decisions.
Got it. Interesting. Yeah, interesting. And interesting as well to sort of like see which ones matter, because that convergent triangle there, I mean, could you not see that as a lower high? You've seen your double top, and couldn't you then sort of interpret that as a lower high?
You could. So one of the things which you probably may have caught me saying that you can trade off a double top. In this case, because they're consecutive, there's very few candle separation. So the double top and the convergent triangle, I see them as one. So you could see that as a double top low high as one. You can trade off that. The only issue is if you take in that, you now need a measured move stop of that whole pattern that we're looking at, which is quite high. So you can take that. If and you got to put that measure move stop in case you got that extra push, which you got, or you wait for a clear third push, like we got that higher high. You may not get that. It might accelerate down from the lower high. Then it's like, oh, well. But if you take in that, put a measure move stop in, go in a little bit low, and if you get that additional push, then you're going to make a call. Sometimes I then go in again, even though it's going against me, I go and increase my position. Because now I'm saying, oh, okay, I've got, here it is, a higher high, whatever it may be, decent enough reversal. I'm going to take the chance. If I'm wrong, I'm out 2 times my initial risk. But if I'm right, then that second trade, by the time we get to break even with the first, is in money. Let me show you something that happened on Hang Seng earlier on today. Now, Hang Seng this morning was interesting. So this whole pattern here, before we got this kind of breakout. So, I mean, if you look on the daily, so before we got this move, I kind of thought, well, this is a 3 push pattern, 1, 2, 3. The bear candle is very bad for the bulls, but it is still, an opportunity for the bulls to accelerate up. So this could end up as a wedge bottom, but the probabilities favor the bears because it's not a bull candle. Now, when I say the probabilities favor the bears, for me, it simply means, we've got that double bottom, bear candle, bulls bought into the close, so there could be a little bit more buying at the open and then we sell off. So that was my thinking going into the day. Then, we had this gap up tail problem. So, I don't jump in, I just got to wait. And seeing all of this, and I'm thinking to myself, well, when I saw that, that's very bad for the bears. If this had been a failed breakout, try to test the high of Friday, high of yesterday, a decent enough bear candle, I would have sold beneath there, but dodgy problem, so let's wait. Failed to break out, we get that 2-bar reversal, outside candle, everything is wrong with this pattern to jump in. Then by the time we got to here, I'm thinking, oh, okay, we've got a we've got a trading range open. I'll show you a bit of what I just call scenario planning in a moment. So now I'm thinking, okay, there's no way to jump into this market. But if the bears, so here's the thinking which makes price action interesting. If the bears want to come and take out the low of yesterday and accelerate down, well, they can do it anywhere in here, because if they do it anywhere in here, a measured move down would take them down here. So that's the very first opportunity. So I'm looking for the double top, low, high, anything within here, but we don't get that. Then we get this. This is an example of one of those surprise candles. I'm waiting for beautiful things to set up for the bears, and boom, all of a sudden, that comes in, and there was no way to have jumped in here. So now I'm saying, okay, now we've got to the measured move of this pattern. Perhaps what the bears are looking for is to reverse the market in here. And if they reverse the market in here, so after seeing this, I'm saying, well, if the bears reverse the market anywhere within here, it could be down here, then they have an opportunity to go even lower, right? So they'll get to here and get all the way down here. So now I'm kind of looking for ways to go short. So going back to your point, couldn't you see that as a lower high? So this is not a lower high, but this is a reversal. So when I saw that, I thought, well, I'm going to sell here.
Right.
Because I think there's the opportunity. I mean, this is the on the daily, the 10 a.m. and the daily, the bears have an opportunity to accelerate all the way down here. Sold here, and then sold here again, decided to increase my risk. And we didn't go down going towards the close. I got out, made a bit of money. But let me show you on my PowerPoint. I started making notes on it earlier on. What I'm talking about. It may sound crazy. What is George talking about?
No, it's really interesting, mate. The fact that you are sort of like looking so intently at each bar. I mean, I don't know if Jeff does quite this analysis, but I definitely don't. I wouldn't look at each bar and see. But it's fascinating, actually. It's really interesting to see that you effectively could trade one market. I mean, I know you trade 3 or 4, don't you? And you don't need a whole bunch. It's just trying to really understand the story. But yeah, it's interesting, very interesting, mate.
So okay, now this is where it really goes crazy. So I'm saying, I'm sitting there and I put this up and I'm saying to myself, okay, something sets up the double top, low, how are you going to sell? But what could the bears be trying to do? So I'm thinking, if they break out above here, this is before anything takes place. That's where they want to go. And if they get here and create a reversal, then they want to sell all the way down, right? So this is where we are. And I'm saying the measured moves, if they get there, all the bears will be doing is testing the breakout in the US session. This was a pretty strong breakout and lower highs. So maybe the bulls want to go up here, the bears will come out and show their strength from here. But if they create a reversal here, what then? Well, that's when the measured move of that reversal, if the bears got it, will be to bring the price down here. And why would that be important for the bears? Well, if they bring it down here, then they're starting to test these lows in March, because huge sell-off here in March. Bulls came back and really fought off. And the bears, that was the objective, to get beneath here after this sell-off and go down, and they failed. So they want to test the resolve of the bulls that repulsed them here. If the bulls are strong, they'll come back. If not, this market is just going to crash. It's going to crash, and just who knows how far it will go. So that was my thinking. That's why when I saw those shorts, I was willing to jump in and take the short. So right now I'm still bearish as far as this market is concerned. Again, this might help answer a bit of your question. Could you take that? You could take that. But if I'm going to take that, I have to be comfortable and be aware there might be another attempt. So that's where I would put a stop up here if I'm taking that trade. Alternatively, if I get a lower high here, 1, 2, and a strong enough 2-bar reversal, I'll take that trade, but then my stop is here instead of up here.
Got it.
If I had taken that at a quarter or a half and I get a decent enough reversal again here, I'm very happy to add in again the same level, but now I pull all the stops down to here. So if I get stopped out, I'm still getting stopped out at the same level as that.
So actually, you know, just what you were just saying about the lows back in was it March or February? Yeah. In March, your sort of reading of the chart and the story that you're kind of adding actually starts on the daily. That's really what you're interested in. Is that correct? Yes. Yeah, and then you flip to the 5 for the real detail. Yeah. Yeah.
It's the daily is the controlling factor. That's it.
Yeah. Yeah.
Next question, George. Yes, you've had a break and a retest of whatever moving average you've got there. Yeah. Which is about halfway between price and that high. And then you've got a seller bar. Why wouldn't you trade that? No, sorry. Go back half a dozen bars. Between there, that one.
You could sell that. The only reason I don't sell that, I look to the left, and by the time we get here, I already have big question marks in my mind. Okay, so I'm saying to myself, here the bears were strong. They were strong. Why do we have a doji? Why is their strength weakening on the retest of this 50% extension of yesterday? So yes, they've come back. They're strong, but the preceding price action is not strong enough for me. I could sell that, but then I'll still have to put a stop up here. If we had at the EMA candle like that, no dodges, that would have been a fantastic breakout pull. I'll take that, put the stop here. As soon as you accelerate down, tighten the stop. So it's just, that's my problem here, what we have here.
Yeah, my problem would be similar to the first description that you had. You haven't had a response from the buyers at that point. So you haven't had a rally to give you a lower high, which is what I'd be looking for.
Yeah. So it's building up those facts. Now, I keep saying, yes, you can take that, because if you look at this enough, and probably from the price action, Jeff, you could have seen that. If it's not strong enough, market might come back. So, and then still go your way. So rather don't get stopped out, put the stop here. Now, the other thing is, if you put the stop here, I have no problem when I start to see all of this. I'm not going to leave my stop up here and say, well, if I get stopped up is small, I can pull the stop down all the way here. And if I get stopped out, it's a fraction of a risk, because I know the case was weak anyway. The reason I put it up there is we might just get a big surprise candle and immediately reverse. So I don't want to get stopped out. But if it just keeps going sideways, I'm not going to leave the stop up here. Just trail it, pull it all the way down, or even up to this lower high.
Cool.
So
that lower high would be nice on that chart. I don't see. I want to see a rally first.
Yes, I want to wait. Just keep watching it. I mean, this market closes in 40 minutes time, so I'm not going to rush to jump in before that, because who knows? Who knows who's going to cough during the break? So rather wait, and see. You don't want to take a trade and get a gap up or gap down. Rather wait and see what happens. There's enough time in the day still.
Yeah, yeah. You'll be trading for another few hours, then, will you, George?
Yeah, I'm trading all the way to 30 minutes before the US Open, so I've still got plenty of time.
Right.
Yeah, do you take no-dos or something like that, George? You can actually get through that, or which particular root herb are you on to get you through all of that time?
I actually cheat quite a bit. So I'm saying from 3:15 to 6 a.m., right? Then I leave the business park. I'm home by 10 past. By 15:15, I'm on the road, exercising, working, come back, go drop off the kid at school. And typically I try and get back here an hour before the UK opens. So I've refreshed over a couple of hours. Then
Lots of breaks.
There's lots of breaks. And then I've got a fix here.
Oh,
Nescafe Gold coffee.
Okay, Paul will get another email, I'm sure. We're in trouble. We're in trouble
what
again.
was the one that you provided me with something, George, in Bali? It was some sort of
yes, that was
some sort of delicious coffee. Yeah, what was that?
Yes. That was a homegrown local coffee that I was trying. It was beautiful.
Oh,
But
I really like
I don't-
that. Yeah.
Oh, and I came back from Bali. I said to the lady, "Can I have my 2 bags?" And they kind of like gone out of business. So that's
Oh,
I should have bought 10 bags or so before. So that's been disappointing. So
yeah,
kind of Nescafe.
yeah.
But there's
Good
plenty.
mate.
I'm never tired. There's plenty of breaks, and I'm recharged. I don't sit in charts when I'm dozing because I lose money.
That was my point.
Yeah.
There's no way you would sit in front of the charts for 10 hours straight, right?
No, impossible. It's an impossibility. Yeah.
But you did try it, right? I tried it. Doesn't work.
I know I've tried it. I've tried for more. I've tried to sit through, 24 hours and I gotta make that money.
Oh my goodness. Wow.
And you kind of realize, well, you actually don't. In the end, you
Counterproductive,
lose.
right?
It is, yeah. So you gotta make it fun. I mean, you gotta enjoy what we're doing.
I presume, George, as well, you've done some study on the most lucrative periods in the day, and know, actually, I can take it. The probabilities are I can take a break here, and it not be a problem.
Yes.
Yeah.
I don't want to miss the Open.
Yeah.
UK Open, the first hour and a half, 2 hours. I want to be there, and then and I'm happy to kind of say I gotta do something. I'm gonna go. There's areas, and I don't want to miss the morning session of the Hang Seng. I'd rather miss the second session. That's why the second session opens an hour later. I'm happy to miss that, even if good things happen, and come back an hour into it. I have no problem with that, because more often than not, we kind of going sideways in that session before the UK session opens. So it's you kind of got a feel. I mean, you do miss things. You come back and you say, "Oh man, George, you should have been here." But more often than not, it's okay just to let it go.
Yeah.
But I don't want to miss particular exchange openings. That I don't want to do.
Yeah, I think it's really interesting, mate. Just watching somebody, because obviously, I've moved away over the years from from reading charts, and not sort of extensively, but I suppose I've moved more towards what's off the chart, and then trying to get an idea of what might be well worth trading. But it's the more kind of time goes on with algos and robot trading and stuff like that, I think the maths is potentially going to play a bigger part in where we go. And obviously, if you can read charts and you understand sort of what the bars are telling you, what the price action is telling you, where the measured move is, where you should put a stop and entry, and you come up with a system which is almost purely mathematical, really. You'll put, the pictures are there, of course, but it is purely mathematical. I wonder whether over time that those sorts of systems may well actually win out if you're short term. If you're just purely trading sort of like for intraday, longer term systems, of course, Warren Buffett would be a proof that if you've got a decent handle on fundamentals, and where the fundamentals aspect suggests where price can be, obviously that works. But yeah, I wonder whether we get more towards the skill of being able to read charts, and the importance of being able to read charts as those algos kind of take hold.
I think the challenge is very similar to what we've got now. I mean, we're trading, it's David versus Goliath, isn't it? At the end of the day, we're against a big beast. There's no question about that.
Yeah.
The algos have tried to tame the beast, and now we need to understand two things: what the big boys are doing and what the algos are doing inside of that. So if we don't have an understanding of that, then we're probably kidding ourselves.
Well, that's what I'm saying, mate. Will it get to the point where if you actually just work out the maths, that you just go, actually, here's the equation: entry there, stop there, take profit there, add point here, and being able to sort of, you know, sweep a lot of losses away because you've got your maths right. Does that become actually the way to go, rather than worrying too much about what other people are doing? Because we can almost sort of like add so many filters in our head, you know, about sort of like ways to beat the market. I wonder whether we're actually overcomplicating. We're in a phase where that overcomplication could actually reverse, and actually, if we just sort of like get a decent formula, we can be done.
You know, years ago, I did a little exercise because I had someone talking about it. I said, I'm gonna go find out myself. If you know, if let's say Jeff was to give you 10 charts, Ash, without this labeling, without the pricing, without this, you know, 5-minute daily, whatever, and say to you, firstly, when do you think this trading took place? What market was it? Was it then a 5 or daily, whatever? You would absolutely have no idea whether this was 50 years ago, daily chart or 5-minute chart. And the whole argument was, it's just human behavior. Whether it's been programmed using a computer, there's still a human being who's saying, this is how I'm going to respond to fundamentals or to X, Y, Z happening. Then we got to decide now, are we, like Jefferson, are we big boys that think we can move the market, or are we smart traders who want to see what the big boys are doing and then follow on to that and make our money from that? And, you know, I like to think of myself where the big boys are going to move. I got to try and find out where they're moving to and see if I can just jump onto that bandwagon and get my little bit of wealth out. And then when they change their mind, I want to get out and wait for what they're going to do next. But that little exercise, I mean, it's really just, and then the other thing was, go find exotic markets, bananas, oranges, pork chops, whatever. If anyone that's got a chart, you still can't tell whether this is S&P 500, whether this is bananas. So that's coded human behavior.
Yeah.
Chart's a chart, right?
The chart's a chart. Yeah, do you know what? When I did some work with Gordon, the first chart we had was just completely without any indicators whatsoever. And as time's gone on, I've added the indicators on to sort of test the system out. And interestingly, my best results were in the first week, you know, when there was nothing on there. I was just reading higher highs, lower lows, and just reading sort of like support and resistance, and that was it. And that's what I'm saying about overcomplicating. You know, sometimes we add and actually, do we need it? I don't know sort of like how important it ends up being. Are we actually creating a lot more work for ourselves? For what percentage? What is our percentage gain really? You know, I mean, I haven't tested it, so I don't know, but I'm interested to sort of like know whether actually the pure maths of it just states just what we're just saying with the pound, with the dollar. If the dollar defaults on debt, the dollar's tanking. So you don't need anything with that. You just sell the dollar at an affordable price to yourself, and if it works out, you make a whole bunch of money. And I guess it's that kind of thing, you know. If you sort of like if you can find sort of those things that have got a decent risk reward ratio from the level you're trading at, and you do that enough times over 100 trades, do you come out on top? You know, and is that enough of a system? Well, that low that you were talking about in March, George, is a buy area, for an example. So, you know, people are just going to buy there. I mean, of course, that's what the big guns are doing.
Yeah, I mean, they're going to be looking and saying, well, if we get down here,
we're just going to buy it.
we're just going to buy. Then they just worry about where the stop is going to be, right?
Yeah, exactly.
So if that's what the big boys are doing, then I'm just going to wait for a day that shows me that there's a decent enough bull reversal.
Yeah.
Then I'm not going to that day and look for ways to make money on that day. If it starts to sell off, I get out of it and just sell it maybe with double, micro double bottom or something. So I'm not a big boy, so I'm not trying to change the market. I'm gonna wait to see, if I see a candle like that, try and buy. If it fails, I'm out. If I see that, buy and hopefully get rewarded somewhere along the way. Wait for the big boys to confirm it and then jump in. That's kind of my approach.
Yeah, I like it. I mean, I think the systems are great. Phil, you got your hand up, mate. Have you got something to add, or is that from before?
I think he's had his hand up for now.
That's just for now, mate. Yeah.
Okay.
I just can really relate to the stuff George is saying here. Amazing how much it overlaps in some of the stuff I do, to be honest with you. But you made me smile the other night, Ash, and you just brought the subject up again unknowingly. And I explained this to Jeff and he laughed as well. So I thought it might be good to share it with you. You just mentioned about the fact that you started basically with a basic chart and then you did all right, but then you kept adding things and thinking you're making yourself more safe and all this sort of stuff. And I said to Jeff, it was ironic the other night where you thought that there's a lot, you commented there's a lot on the page on my MRI system.
Yeah.
And as I said to Jeff, it made me smile because your trades, which I've been learning as well, what do you consider? You consider interest rates or what the Bank of England's doing, or all the seasonality, or it goes on, and you just think about it yourself, how you trade, okay? And you know more of it than I do. And I use purely, basically 3 or 5 things.
Yeah.
And you reckon my system's complicated.
Yeah, no, that's fair, mate. That is very fair. Very fair.
And I said to Jeff, I can't understand where Ash is coming from. I'm not sure how to answer his questions, because to me it was just absolutely ironic. I reckon you use dozens and dozens and dozens of considerations for every trade. And as I illustrated, a lot of times I just use, because I've got the confidence in the time, I just look at those 3 indicators. That's all I use.
Yeah.
3 things.
Yeah.
I do use another predictive tool to tell. I can tell where it's going. Once it moves, I know where it's going to. That's one good thing I've got that I haven't shared with you yet. So that's an extra one. So you could probably say 6. But apart from that, just use those 3 to start with. Then you've got your time by degrees for confirmation. And then I've got one that tells me how far it's going to go. So there's only a maximum of 6 things I use. Yeah. So you've been doing it so long, and you know it inside out. You know all the influences that you think of the. And then on my system, you said, couldn't you bring up, what about what the planets are doing? Well, then you've got another 9 times. That's another 18 million to 1 that you're never going to know now, you know what I mean? But you think of all the possibility in your head that you consider. That's an amazing mathematical calculation for the average person.
Oh, yeah, you're absolutely right, mate. Yeah, you're right. Yeah.
So that's one version. Look at it. I've just got a question for George while we're here, or a comment. I love your work, George. Have you done any work on the Wyckoff system?
No, embarrassingly, I must say, I've not heard of it.
Yes. So, and a version. It's related, but it is technically different. And that you might have heard of is called volume spread analysis.
I don't use any systems at all. I mean, the last kind of systems I tried like 12 years ago was good old RSI MACDs, and that's the last of it. So I've never used any other system. Yeah,
okay. So the volume spread analysis one uses volume, obviously, and the spread of the bar. But the Wyckoff one, it is amazingly similar to what you do. I reckon you'd find it very interesting. WICKOFF it is, if you ever want to look it up. And I reckon you'd relate to that. I've studied it a lot, and I just say it's probably not quite for me, but I reckon you'd nail it straight away. It probably help. It may help you. You never know.
I'll have a look at it. And here's a funny story about why I stopped using RSI and MACDs. I had a coach, and like Ash, the very first time he told me how when this crosses over and that crosses over, etc., go do it. We'll catch up next money. I will catch up next month. I made money in that month. And then the subsequent months, I lost a ton of money. And every time I went to the coaching session, you would say, no, mate, you know, when you see this on the weekly chart, then you must change your MACD or RSI to 6 or whatever. It's so many. I never could pin him down on it. In the end, I just say, well, I'm giving up on all of that because, and I realized that I could not process all of these. If this does this, then tweak it.
Yeah.
And that's why I can't use any system, because I like to reason things through.
Yeah.
It's
not absolute, is it? Well, the
No, it's
nuances
not.
just to make it not absolute. Yeah, exactly.
But I think at the end of the day, sorry, Phil, you go.
I was going to say that's where the Wyckoff, George, is just does what you do. It micro analyzes each bar. That's what it's based on.
Okay.
Yep.
I'll have a look at it. Thanks, Phil. I'll definitely have a look at it because I'd love to know what it's all about.
At the end of the day, aren't we saying whatever floats your boat?
That's it.
Yeah, I think that's probably true,
Yeah.
mate. And don't get too kind of blown off course.
Well, everyone's wired a bit different, aren't they? They all see things.
Yeah.
Like I can relate to the time, and George can relate to the bars, and Ash relates to all the fundamental data, and you relate to setups, and they're all valid.
Yeah.
But just everyone's got can comprehend different things a different way, and the brain's an amazing thing, isn't it? And we're all wired a bit different, so lucky for that, I suppose.
Yeah.
At the end of the day, if every retail trader was trading exactly the same thing, we wouldn't have much to trade against, I think.
There'll be no market.
Yeah, true.
So
we better push off anyway, mate.
Thank God we're different, huh?
Yeah. we are coming up to 15 minutes over. George has probably got a bit of he's probably got half a marathon to run. And
gotta go and climb a mountain. Yep.
Go climb a mountain, yeah. And do all that stuff before he comes back for the US session.
Phil's got to go feed the chooks. I've already done that, so we're good.
You've done the chooks. All right. Well,
actually, one thing I must. I did put that link in the chat box. Those of you who wanted to have a look at that, it is a very long link. My apologies, I should have shortened it, but that's it. Thought-provoking, if nothing else. And Ibrahim Yusuf, haven't seen that name for ages. Hi there. Sorry, didn't get to say hi back to you. And Tajul, stay off that Nescafe latte caramel 3-in-1, mate. won't do you any good at all. But thanks for putting it in the chat on YouTube. Nice to have you on board as always. Guys, thank you for today. Thank you for contributing, everyone who has. And thanks for being our trading buddies, everyone. We look forward to your company on Thursday when we'll do it all again. And hopefully this market's had a little bit of a rocket up its backside. And we'll see if we can make some cash out of all of that. Have a wonderful week ahead. Bye-bye for now. See you. Oh, I've got to close it, haven't I? Hate it when that